Yo, yo, how we doing, guys? How's it going? Let's see. Are we live? Are we working? Yeah, there we go. How we doing, guys? Right, let's jump straight into this. So, thanks for being here. Tonight we have WMD Forex War Hunting is joining me for a trader chat, and not many people will remember this, but about 6 years ago, me and Will did one of these, and it isn't on his website because it sounds like I kidnapped him and threw him in a metal container while we interviewed each of him. So this is like a rerun of that and a newer version of that stream. So on the agenda for tonight, we're going to run through Bitcoin. I'm going to do 5-10 minutes of analysis just to see what I think of it. And then I'm going to send it over to Will so we can see what he thinks of things. And then we're going to run into more a sort of technical chapter on time-based ranges, which is something him and I have talked about before, but I need to pick his brains about. And think that'd be great for everyone else to hear about it. And then look into more like the trader lifestyle and mindset and psychology side of trading. And I joked with Will a minute ago that the first part of the stream is going to be for the viewers, and then the rest of it is going to be a therapy session for me, because there are certain subjects that I want to talk about. What I do with these streams is to meet other traders, speak with other traders, get their kind of background with trading and learn from them basically, and see if we can help others in that. So yeah, Will, how you doing? You can unmute yourself now.
Hey, how's it going?
There we go. Right. So nothing really to add on that. So I'm just going to run straight onto the charts, and then I'll send it over to you, and then we'll get chatting. Okay, mate?
Cool.
Cool. So you can unmute yourself again. You can mute it. Right. Okay, guys. So Bitcoin is at a pretty key area now. I'm on the daily time frame, and I put a post up earlier about how we have a little bit of symmetry with this level and this level. So we have a big low here, which basically sent us all the way to the all-time high. And then we have at this point, which is where we've got a downtrend after hitting that high beginning of last year. And then instead of respecting that downtrend and dropping, this is where the buying took place to ultimately break this high up here. So they're two key levels for me. And then sitting on the top one, let's start with this. We have an impulse down, we have a retrace, and then we have a sell-off. And this is basically what I call a decision point, like an origin. It's where the sell-off, the decision was made to take out this low here. And normally on retests of the extremes of these levels, particularly in a strong downtrend, we're going to get a reaction, which is what we got here. And then that sent us to new lows. So then coming back to this low, which I don't think is a super important level, but it is the start of a massive swing in price. We bounce off of it, again, retrace, and then create a new low. And this is what I would call, again, the decision point to break this level. And I've been saying for ages now that even though I would mark the whole level like this, from a supply and demand perspective, you have what was called a drop, a base, and then a drop. I like to mark the extremes of the levels because, as you can see, it bounces from the bottom here, but it doesn't create a new low. And in order to find more liquidity, it's going to come to the extreme of the level, which I call max pain level, because if you're short here, it's where max pain is, because you'll be shitting yourself thinking you're going to get stopped out. So it's going to do one of two things at this point. It's going to break it and head up, or it's going to respect it and drop. So we're at a pretty key point in the market, in my opinion. Now, if we jump down to H4, we've had a pretty solid move up into it over the past, when was it? Last night. Just started ripping up. And I think that's a pretty key tell that we might get a reversal soon. We might get a bit of exhaustion, but not yet, because it is still looking quite strong on the hourly time frame. We have this high here, which is a bit of a local high, which doesn't really mean too much to me because it's just a retrace point. It's where we failed to hit my take profit up here last week and then came all the way back down and has now found strength to come and take it out and into this level here. So my plans basically is to look for some sort of exhaustion, maybe on another move up, and then start seeing some lower lows, some lower highs, and then get short on a drop where there's strong momentum. Typically, and this is what we're going to cover a little bit more in chapter 2, what I look to, how I look to trade is I look to see ranges at key levels, and then I want to see the highs hold if I'm short, and then see some lower lows and get some momentum breaking out to the downside. But if you're looking for longs, you know, you'd see signs that this is going to push up and then maybe come back down to support, build, and push up. So I'm looking for shorts. I'm looking for exhaustion of this move. I don't think we've got it just yet. But if you're bullish, you would really need this level to hold. You can see there's a lot of empty space underneath it. So you would want to take this level out, retrace down to it, and you'd want to see it hold. And this is where I'd look for reversal patterns in the form of just a range where price goes sideways, starts breaking out, holding the lows, and with some strength starts pushing to the upside. So that's what I'd be looking at if I was looking for longs. I wouldn't be looking to long up here because we're right at resistance. But otherwise, if this level breaks, then I think this is going to go a lot lower. One thing I've noticed with Bitcoin over the past couple of months is that we tend to have a bit of a shit show at the beginning of the week, Monday to Wednesday, and then we end up getting the move to set the weekly candle, whatever, on a Thursday or a Friday. So going to be looking out for that tomorrow, but I think this is all just building the foundation for the next move. And I think with market sentiment, just ignoring the price action for a moment, people are getting very bullish, and we're at a really key inflection point on the charts, and that's normally a good sign to fade people. So I am looking for shorts. I am looking for this move to get exhausted. So yeah, they're my thoughts on it. Now I'm going to head it over to you and share your screen and see what you are thinking of Bitcoin.
Oh, sorry, man. Yeah.
Brain lag.
Yeah, bit of brain lag. Yeah, no, it was internet that was lagging, bro. Honest. Yeah, that wasn't me. Right, that wasn't me in my early onset dementia. I don't like I haven't really any kind of long term view on Bitcoin right now. We've progressed quite a lot into the month, right? So April is kind of putting in a solid performance, really, almost from the lows, right? And when I'm breaking down a chart, the kind of first thing I tend to do is just look at how we're performing on a month and how we're performing on a week, and I tend to take my kind of immediate cues from that. So April opened somewhere around the 69, 68 price mark, and she dithered a little bit, broke higher, and has kind of continued to progress. And it's just that now that we're about 3 weeks into the month, anything that price was going to do, and when I'm trading flow, my kind of my objective is to try to catch the early expansion, right? So if I was looking for shorts, the moment price broke down from the monthly open, I would have been selling, and if I was looking for longs, the moment the price broke above the monthly open, I would be buying, right? And just considering where we are in the time cycle and the fact that price has already moved up about 10k in, or certainly it's a decent percentage, isn't it? Right? So what about 12-13% on the month or something like this? At this stage, I'll be more inclined to kind of sit aside and wait until the beginning of the next monthly open and then take my bias from there. Um, I think the days of having these actually, I can't. I shouldn't really speak for everyone, right? Which old habits die hard, right? But I just don't have a long-term read on it, right? Like when this was trading, I think when we first actually did that Webby, like Bitcoin was trading at under 10K, and Paul Tudor Jones had just published his thesis on why he was buying Bitcoin, and um,
Your
I
hero.
mean, yeah, you knew back then I was a skeptic, right? But you were asking me about Bitcoin, so if I was doing anything, I'd be buying, if only just because Paul Tudor Jones, who's an absolute trading god, has gone long, right, with 2% of his net worth, and he's worth more than 10 bill, right? So I think it was quite an easy call back then to be saying, hey, Bitcoin is going to uh, go 3x, 5x, 6x, 10x from here. But while she's sitting at 80K, um, it it's hard talking about your 3x's, 4x's, 5x's. She's just not showing that she's got that kind of stamina right now. So I think having that kind of huddle mentality at this phase of the market cycle, you have to be a true believer, right? You really have to be. And I mean, all of those market conditions that pushed Bitcoin higher from 6 and 8 years ago, I think a lot of them are absent today, right? And as well, there's a lot of alternative options that people have. I mean, Bitcoin was always a get rich quick scheme, right? Because of the volatility and how quickly it would move. But I think people have a lot of options now, right? It's not just Bitcoin. There's a lot of uh, other instruments out there. There's a lot of other markets that people could be looking at and kind of putting their money in and making those rapid gains. So as usual, I need to throw a caveat there. I'm usually completely wrong, right? But uh, I mean, that's my perspective, and so because of that, over the course of pretty much this entire year, the better part of the tail end of last year, I've just had very short-term views on Bitcoin, right? Trade flow, trade the direction of the month, get in, ride some part of the move, and once some kind of expansion has happened, just take your money and wait until the beginning of the next cycle, right? So April, if we're going to do a little bit of hindsight, back testing on the monthly flow strategy, it would have given you a short trigger. You would have got stopped out and gone long, and you could ride the wave higher, and that's pretty much all there's been to it. Next month, it's not that far away. It's just it'll be this time next week. We'll be setting up an open range for May, and again, if I'm long, I'll be long above the open range, and if I'm short, I'll be short below it. But also not wanting to disappoint on a technical note, I did mark up a couple of levels for you, right? So I'll whack them on my chart, right? I mean the walls the walls that are marked here, I think I posted them on my timeline some months back, right? So when price was kind of breaking down, we were looking for the next extension lower. From a technical perspective, throughout March, I was actually using this kind of mid range wall here for bias. So it was shorts below, and once price kind of broke out above, that kind of gives you a clean long bias. But there are some tailwinds ahead, right? And I'm going to have to just check linear chart, right? Just to make sure. Yeah, right. So I'm the levels that I'm looking at are 82K, and then above that, 88.4, right? And I would be more inclined to look for a rotation up at the 88 level, but if there's going to be something early, like some early resistance, if you're going to be looking for it, I think 82K is around about the right mark to start thinking about fighting the current momentum. Although, like I said, extreme caution as it stands.
What are those lines? Are they your old tasers without the colours?
I just make them up as I go along, Matt, right? And yeah, but somehow they just keep working, right? And then it just makes me look really good. But shoulder walls are all the rage, or the kind of rage right now. They have been. The market's been respecting them quite well over the course of the last few years. And so when when you're doing something and it's working and it's modeling the market and it's explaining market rotation, you just kind of keep going and keep doing it, right? Until the modeling breaks down and stops working. But anytime I get some kind of head and shoulder structure, which would in this instance be something like this, I'm inclined to mark walls along the shoulders, right? And it's the exact same thing that we did here. Um, if you want to consider, there was a kind of inverse head and shoulder there, and it's the same thing that I'm doing on the reverse. So once she starts extending into the upper end of that range, I would expect some level of exhaustion. But like I said, right now where we are in the monthly cycle, that just the fact that we're at the kind of tail end of it, I'm not overly excited about any significant swing. I would be quite happy just to wait until the beginning of the next month, and then to take bias and direction based off of that.
As price action traders, one of the things that is kind of a bit of a hot topic on Bitcoin at the moment is whether this current range that we've been in since February is a bottom range. Is clear consolidation, and it's kind of symmetrical compared to the one that we had at the top from like November time. Do you look at stuff where it's like as accumulation and distribution? Do you look at this as like it's consolidating for a big move up, or do you look at it as we're in a high time frame downtrend? We've yet to hit any major resistance to the upside, so it's possible that it's gonna continue that downtrend after hitting that resistance and copy somewhat similar to that previous range high. Do you look at anything like that these days? Can you like, because as someone who's been focusing on ranges like basically for all of my trading career, I look at this and think to myself, I need a strong breakout to get kind of a bit excited to go long. And the whole accumulation distribution argument, I'm a little bit, I can't put my finger on what it's going to do. Basically, there's no real tell from the market other than the fact that the push up so far is somewhat strong, but it isn't something I look at as this looks like it's going to rip out of this range.
Um, I don't know. Like I've never really kind of thought too much about accumulation, distribution, ranges at the highs, ranges at the low. Um, I've I, I was I've always used trend lines and I look for symmetry in the market, right? So and I think um, his I mean when you're using lines, as long as you've got some kind of precedent for the model that you're building, um, you can have a reasonable degree of confidence in the kind of reaction that you might expect. right? So, um, I mean, I think a lot of guys watching maybe have been following for a while, but whenever I've marked shoulder walls like we did at the lows here, uh, I would expect a good and strong reaction off of it, right? And a good and strong reaction tends to be the limit of what I'm thinking of in terms of outcome, right? So once that kind of first rally had happened off of it, I'd be quite happy to take my money and leave it alone until I'm able to remodel the market, right? So, um, uh, uh, I'm much more about kind of using symmetry in the market in order to model and then to predict some form of rotation rather than uh, this kind of Wyckoff accumulation distribution model. I don't have anything against the technique. I just kind of think that a lot of not all roads lead to Rome, but a lot of roads do, right? And you just have to find something that you're comfortable with using and have a degree of confidence that it actually models the market correctly. It's just something I've never found. Um, I wouldn't say not useful, but I think when you're using technical charting techniques, you tend to end up having a natural eye for something, right? And I don't like the idea of forcing myself to have to look for technicals in a particular way. I'd rather do what goes natural, what comes naturally to me. And when I'm looking at a chart, I can kind of see the angles and I can see the symmetry and I can see the walls around which the market is rotating. And so I end up charting those naturally without having to use uh, too much brain power or too much effort, right? Which is where I think typically people make mistakes and errors, right? That they're trying to do something which is just beyond their natural ability to be able to do it, right? So whatever charting technique anyone is using, just as a piece of maybe generic advice, you got to go with what you find easy to do rather than forcing yourself to do something that you find difficult to do, because as much as we like to believe that trading is a peak performance sport, yay trading, right? And it's real. You got to be a real alpha, and it's like peak performance. But peak performance is what causes people to break down, right? It's like a Le Mans 24 hours. You can buy a car and that car won't give you any trouble, and you can drive it for 40 or 50 years or something. Put it in a Le Mans, and it won't last 10 hours running uninterrupted. And I think trading and the trading techniques and charting that you use is going to be quite analogous, right? That if you're having to operate at peak performance for a long period of time, you might make some money on the way, but eventually you'll break down and lose it all. Rather, what you ought to be doing is looking for a system or an approach that allows you to operate on 10% brain power, right? And then if that's kind of working for you, you'll be able to do it forever continuously without ever without ever breaking down, right? So there's a lot of things I've looked at in. I don't. I think there isn't a stone I didn't lift and look under when I was trying to work things out and work out what would work for me and what wouldn't. Um, and so, like I said, it's no kind of. I don't want to be careful. I'm not kind of disparaging any particular technique because everyone's a little bit different, right? Just I took much more naturally to using things like trend lines than other TA, right? And then so it's kind of trend lines and symmetry, looking for the long-term rotations, and then short-term trades was much more about flow, right? Price only ever goes up and down, and you just got to figure out where it goes up and down from, and for me, I'm using just simple basic levels, right? I'll use a monthly open and say, well, price is going to go up and down from here. And then I will look for a signal, or I look for a sign or a tell that indicates which direction the price wants to move in from that level. I can do that from a monthly open. I can do it from a weekly open. I can do it from a daily open if I still had the heart for it, right? So that kind of summarizes actually the entire universe of uh, TA or strategic view I tend to have.
I think the more I've done this, I've been trading like 11 years now. The more, well, especially when we last spoke, like on stream 6 odd years ago, and I had the group, and I was a lot more focused on technical analysis, and I was like, right, if we've got this resistance here, it's gonna do this, and blah blah blah. But what I've kind of realized is you mark these areas on the charts where you can kind of get an approximate idea of where you want to do business. And then you just end up watching the flow. You just end up watching what the candles are doing. If it looks strong, like to the upside, you just buy it at a logical place. And then if it looks weak and it looks like it's going to drop, you just sell. Is that kind of how you look at the markets as well?
Um, I think it's going to be quite hard it's going to be quite hard to maybe break that down without uh, without kind of demonstrating the exact techniques, and I'm not sure if there's enough time for that, right? But um, I have very specific tells that I look for, right? So it's just like everything in TA, right? It's um, okay, you have your technical level, and you're looking for a repeating pattern. It's a Mandelbrot, right? It's a pattern within a pattern. You've modeled that that you're expecting some kind of rotation. Um, I think let's maybe say, for example, where are we? I don't know, like I've modeled. I'm expecting some kind of rotation at this level, and then uh, I'll have a reversal pattern, and um, I'll be looking for the price to exhibit some form of reversal pattern once it enters that zone. Right now, the reversal pattern I use, it's a very simple candlestick pattern, and um, I mean, the structure is so simple. Once I've shown you what it is, I think you'll kind of come back with, hey, but this structure is absolutely everywhere on the chart, right? Because it's just such a simple structure. You'll find the structure here and here and here. You'll find it here, here, here. It's just everywhere, right? And so the matter isn't that there's a reversal pattern at a place where you're expecting the matter is that there's a reversal pattern at a place where you're expecting a reversal, right? And I hope I've said that in English and it makes kind of perfect sense to everyone, right? But you've got an extreme low headed into the shoulder walls. You're looking here and you're saying, look, I need the price to behave a certain way. I need it to exhibit some sign that I recognize as a sign of reversal, right? And like I said, that candle pattern, it's everywhere on the chart. But what matters to me is when it occurs in a specific place where I was looking for rotation. And that allows me to execute with uh, in a good, clean kind of risk defined way, which um, which is a lot bigger part of the trading story than actually being able to predict a reversal itself, right? It's to be able to get the execution in such a way that if you do end up finding yourself on the wrong side of it, you don't end up completely kind of doing your ass, right? And that's why it matters. And so, kind of equally, when the price was coming back and hitting back into my shoulder walls at the top end, I would at that point start looking for what I recognize to be a candlestick reversal pattern in order to get a sense that the level is actually going to hold, right? So I, I kind of have a what when I'm looking at swings, a swing is a three-part process for me, right? So number one, I say, has the price moved too far in one particular direction, right? I need that to be true, because if I'm looking for a swing reversal, the more that the price has moved in one particular direction, if we've had this kind of secular move where the price has moved especially quickly in one direction and it's just kind of gone too far, it's gone more than it would ordinarily in one particular direction, then the chances that there would be a swing reversal at this point would be a lot more than if the price had only moved a little bit in one direction, right? So, once Bitcoin had fallen 55%, there was a lot greater chance that there could be some kind of significant swing reversal than after Bitcoin having fallen 20% or 30%, which is quite normal for Bitcoin to do when it's kind of doing whipsaws and whiplashes, right? So that's the first part of the process. The second part of the process is that, do I have a technical reversal pattern, right? So in this instance, if we were looking at Bitcoin, I'd be kind of saying, well, has the price gone too far? I'd say, okay, tick, that seems to have gone just a bit too far in one direction. And then the next question I would be asking is, well, have I got a technical reversal pattern? Well, I've got my shoulder walls, they're completing there. So the price is headed into those shoulder walls. And then the third part of it would be, how do I execute, right? And for execution, what I'm looking for is a candlestick reversal pattern that I kind of recognize to be a reversal pattern when the price is in my zone, right? So that would kind of summarize almost the process for every swing trade that I take. One, has the price gone too far? Two, is there a technical reversal pattern? And three, once we've entered that price reversal zone, is there a pattern within the pattern, right? Is there some kind of tell that usually occurs right before price reverses, right? And that's what I'd be kind of looking in there from an execution perspective. So in a similar way, I marked these shoulder walls a little bit earlier on. As the price kind of heads into that zone, and particularly as it heads to the upper end of that, I would start, I'd kind of be running through the 1, 2, 3. I'd kind of say, okay, we've gone from 60K to 80K. That's almost like a 30% move. It's not as far as I would like things to have gone normally, but it's still pretty far, right? It's a significant move in one direction, and I'd be saying, okay, we've gone too far to the upside. I've got a technical reversal pattern, and now is there some indication that a reversal is likely? So is there some kind of candle pattern forming? That would be a tell, and I would use that as a basis for execution. So sorry for answering a completely different question to every question you've asked this evening, but right, it's.
I know you came with your own agenda. That's fine.
Yeah, I don't know. I don't know about agendas, man, but it's a lot easier for me to talk about what I actually do than what I don't, right? So, I think we started from accumulation and distribution or something, right? But we've ended up with something a lot better,
Yeah.
right?
Random one I
Something
was
that.
just thinking when you were explaining all of that was, and I don't know if it's people just get the wrong end of the stick with it. But why do you think there's so many people that believe that you can't trade successfully with price action? Do you think it's because the kind of idea is, right, I've drawn my resistance zone and I'm going to short it, and that doesn't work every time. You've got to put a lot of like different layers on top of it. Obviously, you've always looked at price action. I've always looked at price action, and I know that to not be true. But why do you think people like think that? Do you think it's because you're trying to? They think you've got this crystal ball. You're trying to predict things based on like random lines. Whereas like what I was saying is, if I've drawn a level, for example, maybe there's a bit of imbalance there. That when it revisits it, same as what you were saying. I want to look for some sort of pattern, some really basic pattern, and then try and follow the momentum on a breakout.
Yeah. I mean, where do you meet these people?
I reckon David Bell, like
Really?
I've seen him retweet so many people over the years that, that just talk shit about you can't price action trade and blah blah blah. But I don't know. You see all sorts of stuff online, don't you?
Yeah, I think everyone just has their own kind of view, right? So, I mean, there are enough people out there using price action and making really good money. So, I think the matter is just what works for you. It's not about what anyone else it's not about what anyone else is doing, right? And I mean, you can take the great and the good, right? I mean, Paul Tudor Jones in Oregon was a price action trader, right? And he would add macro to his views later, right? But the guy knows how to read a chart and is worth 10 bill today. So the idea that price action doesn't work or is meaningless or you can't. I mean, the dude was using Elliott wave in the 80s for fuck's sake, right? Which is like the shittiest form of TA anyone could ever adopt, right? And
Careful, careful.
and he's worth 10 bill
We're gonna get
today,
raided by a load of Elliott
right?
waivers in a
Right?
sec.
Yeah, he's worth 10 bill today. So I'm just saying, right? People say price action doesn't work and TA doesn't work and whatever. I mean, there's so many examples out there, right? But then on the other side of the equation, you'd have people like George Soros, who was almost exclusively kind of macro orientated, although he has his own kind of philosophies on how price moves and things like that, right? But he'd be giving a lot more consideration to the macro side, and so there's a lot of approaches that you can use in order to model the market. And at the end of the day, you're just looking for an effect that repeats, right? Because that's what allows you, or your belief that an effect would repeat is what gives you the confidence to push the trigger, which is what's required for you to be able to do your job at the end of the day. So I don't know, man. I think like it's like I said, it's like not all roads lead to Rome, but many do, right? And there are enough price action profitable traders out there. Anyone says price action doesn't work or TA doesn't work or whatever, it's just kind of a bullshit debate, really. I think, and usually people are kind of what do you call it, clickbait or rage baiting or something like this. It's like people are just looking for
Get the engagement and stuff.
yeah, some kind of engagement on their timelines
Yeah, right,
and,
fair.
and what have you, right?
Um,
So
yeah,
otherwise, if anyone was going to be dismissive of particular forms of TA, particular forms of macro analysis, and yeah, I mean, it would be me, man. I'd be just ripping the piss out of everyone because I mean, macro is effectively rear view mirror trading, isn't it? Right? It's kind of making decisions on what's already happened, right? And quite often when people are trading macro, they're late to the party, right? I mean, uh, so I mean, you can criticize every technique, right? Every technique has its shortcomings, and that I think the matter really is that um, when you devise your methodology and you have your systems and your processes and your frameworks that you knot them together in a way where they continue to deliver results, right? You take a hit every now and then. I say every now and then. You can take frequent hits, right? But it's got to be it's got to be a system where you have a degree of confidence where you're able to get back up every time, right? And so I think I think when you have repeating patterns, that's what allows you to do it, and it's just your confidence in being able to recognize that pattern and your confidence that the outcome will repeat over and over.
Yeah, I mean, one of the things that kind of hit me years back was that um, you need way more reps of that pattern. Let's say you have one basic pattern that you're just going to focus on. I think you need thousands of reps to understand all the different kind of ways that something can break out, it can react, where it's going to show up on the chart, how long it looks, like that kind of stuff. And I think one of the things that I've realized as well is that training is so subjective that even though we might be looking at the same levels, even though we might have the same idea of what a technical analysis pattern is, we're still going to trade that in completely different ways. And there is no right or wrong. Like the only right or wrong is if you made money or not. And whether it's repeat, like obviously it needs to be repeatable, but I've found myself kind of debating with people in the past where, why did you do this? This is so wrong. You didn't consider that. You didn't consider this. And it's like, well, it's just going up, mate. It's just going up. And I bought it. Like, why? It doesn't matter. Um, but one thing I did want to ask about is going to be chapter 2. Um, it's time-based ranges. So we met up back in October and we had a lovely bit of Persian food and we talked about this a little bit. And I'm just going to share my screen because I want to ask you some stuff on it. And I think it would be good for people to kind of hear about it. But if I just add a little bit of context in how I basically trade and why what you said resonated with me quite a lot is, let's say we have a resistance level up here like this, right? And price comes back up to it. All I'm going to do is I'm going to look for a range in price. And then let's say we're in an uptrend. I'm going to wait for it to break out of that range, maybe retest it. And then maybe on a second breakout is where I'll look to enter that trade. Or, if I'm looking for a reversal, I'm going to be looking for a breakout to the downside. I'll look for the highs of that range to hold. Then I'll look for another breakout. That's all I basically look at. And I will, if I'm going long, I'm going to put my stop the other side of that range. And then if I'm short, I'm going to put my stop the other side of that. So I look at that basically as we're at a resistance level, we're at a support level, we're at a high, we're at a low, whatever kind of thing you want to call it. But you had talked to me about something which I still haven't really got my head around, which was more like you wait for a range in time to mark out something, and then on the breakout of that time-based range is where you'll trade. Can you go into that in a little bit more detail? Because as someone who's just like literally just watching the candles, I want a structure in price and I want to break out of that structure. I couldn't wrap my head around the fact or the idea that, at 8 a.m. every day, we get a range form, or you've got a range between 8 a.m. and 8:10 a.m. And then you just want to break out on the other side of that. Because for me, I looked at that as not enough context. Like, what does it mean? Is it in the middle of a swing? Like, I couldn't really get my head around that.
Cool. Okay. Um. So I think a little way back, maybe I might have been one of the first people to popularize the term discretionary when talking about trading. right? And it was just like, like we consider ourselves discretionary traders, and I think um, the term discretionary, how it how it kind of gets taken by people is quite interesting, right? Because I'm a discretionary trader, but I'm not a discretionary chartist, right? Or I want so I'm going to rewind a little bit because I'm losing some of my words, right? But um, look, I'm gonna keep saying look until I figure this out. You might have to give me 30 seconds to figure out exactly what it is I want to say, right? But here it is, right? Look, I'm a discretionary trader, right? What does it mean to be discretionary as a trader? What it means is that I will pick and choose the trades that I'm going to take, right? And so when I'm saying discretionary, I mean it as opposed to systematic, right? So a systems trader is required to take every single trade, right? Get a signal, take the trade, right? And what a systems trader is trying to do is, he will have backtested the system and he'll have his numbers, he'll have his stats, he'll have his win rate with the average R return per trade and his win rate and his loss rate and whatever. And he's got to take every single signal because he's trying to replicate the statistical return on the backtest of that system. That's what it means to be systemic. As a discretionary trader, what it means is I get a signal and I'm going to make a choice. I'm going to say, hey, do I want to take this trade or not? Right? That's what it means to be discretionary. Now, to be a discretionary trader does not mean to be a discretionary chartist. Okay? A discretionary chartist, by way of example, what it would mean is that your levels are completely random, right? And I think that a lot of people who are marking SR are actually marking levels. Every time they mark a level, they're marking it in a completely different way for a completely different reason, right? They struggle to repetitively mark a support resistance level. And the proof of that would be that, if you take a chart, if I gave you a chart and I say, hey, can you mark 5 horizontal levels on that? And I could hand you the same chart just an hour later and say, hey, mark your 5 SR levels on it. And you'd scan the chart and 2 or 3 of those levels would be somewhere probably completely different, right? And so you know the problem with that is if you're randomly marking a level, right? If every time you mark a level, you're marking something different. If you mark 10 such levels and you're looking at how the price rotated around that particular level in order to determine whether there's a pattern or not, a pattern of behavior around that level. What I'd say is that you kind of fail miserably because actually you don't even have a data set, right? In order to have a data set, you'd need to mark the same level in the same way each time, right? And if you did it in the same way from the same place 10 times, now you've got a data set and you can examine that data and you can say, hey, is there a repeating pattern? Okay, so just kind of contextualize the kind of subject that we're headed into. And so quite early on in my trading career, one of the things that this got me thinking about is how do I systemize almost my charting? How do I make sure that every time I mark a level as some form of pivot in the marketplace, I'm marking it consistently. I'm doing it from the same place in the same way every single time. And then I'll be in a position to determine whether there is some price action pattern, some kind of rotation that the market exhibits around that particular level, if you like, right? So what I've got up on my chart right now is, I don't know if it's my screen that's being shared right now. I want to double check. I'm seeing yours, Matt.
Yeah, we've got your screen up.
Yeah, okay, right. So, I mean, what I've got marked on my chart right now is the monthly open range, and the monthly open range I take
Can you
on
zoom
the
in a bit?
first. Sure, I take that on the first of the month, and um, I mean, I take it near midnight on the first of the month, and it's just that first few bars that tend to form at the beginning of the month. And what I noticed is that when I'm marking a range based on that specific time, right? So I'm taking, for example, the first Tokyo session of the month from 1 a.m. to 9 a.m. UK local time. I'm marking the monthly open range. Okay. What I've noticed is that the price tends to pivot around that area, and that this area actually is actually support and resistance, right? So if you look at the kind of price behavior that is being exhibited around the range, the price breaks down, comes and taps back, breaks through, comes back, and you've got resistance, resistance becomes support and breaks higher. Where would you ordinarily expect to see price exhibit? Where would you expect price to exhibit this kind of behavior, right? What would you call that?
Deviation or something?
Well, I mean, you'd call it not deviation, but you'd probably call it support and resistance,
Oh, right,
right?
okay.
So,
Fucking hell, I'm a shit student.
yeah, but it's like like price is pivoting around a particular level, right? And in the textbooks, when you mark support and resistance, you say, "Hey, look, you're right. This is support and resistance. The resistance became support, right?" And so, what I've got is a level, and it's a range. It's a time defined range. It's the high and low that forms, uh, on a specific day on a specific time. And what I've noticed is that the price tends to pivot around that range, and that range actually behaves like support and resistance, right? So, I mean, if we look at the previous month, right, this is the range, and then you're getting the exact same thing. Price breaks out, pulls back. It's like where is the support happening, right? It's happening on that very specific range, right? And I mean, we could keep kind of scrolling back, and what you'll notice is that every single time, right, the price tends to pivot off of that specific range. And I mean, it's a curious thing, right? It's a curious thing, but it's like, what is support and resistance, right? Support and resistance, simply put, is the price at a certain time. And if you know the time at which it happens, you will know the price at which it happens, right? And so I think the kind of error that people make, or I'd say the error that people make, but the advantage of what I'm doing here is that my levels are fixed. They're static, they're systemic. My charting is systemic, and I choose only whether I want to take the signal and I want to take the trade. But every month the price goes up and down from the monthly open. If I'm going to be taking a trade, that is going to be the best place to be taking a trade from, right? This month it gave me a clear long bias. Last month it was giving a clear long bias. The month before it was giving a clean short bias, right? And incredibly easy to execute off of, right? And so, I mean, I think the monthlies kind of bread and butter, and that's my go-to. But I have a lot of um, different time-based ranges that I use, and I think this is probably just going to be the beginning of going down the rabbit hole for a lot of people, right? But what if you're going to mark support and resistance, you've got to do it in this kind of static way. You've got to do it in this repeatable and replicatable way. And when you're marking a reference point on a chart, if that reference point is repeatable and replicatable, you will very quickly be able to work out whether there is a pattern that you can take advantage of, whether there's a pattern of behavior that you can take advantage of, right? Whereas if you're marking what I would put in those kind of air finger quotes, right? Like random levels on a chart, where every time you've marked it, it's marked different, then it's no wonder really that you're trying to trade and you mark these levels and the odd one works, but every other time they seem to fail, right? And it's just because you haven't found this replicatable, repeatable way of marking a level. And so I think if we're going to go back to that kind of TA or PA is bullshit kind of debate, horizontal levels on charts that are based just purely off of price action is the most discretionary way of charting, right? And I think that most people, that is the reason why they struggle to get any kind of meaningful outcome off of it. But once you move to a form of PA and TA, which is time based, it removes that, right? It removes that discretionary element. It removes the human, that cognitive element, which actually is usually what messes up most practitioners, right? Most people trying to mark support resistance and apply any form of price action based TA on a chart.
So you've used the monthly as the example. What if you were looking at lower time frames as well? How would you?
I'm not telling you, bro. You haven't paid me that, right? It's just
Hit
that simple.
subscribe.
This is as much as I'm prepared to say,
Yeah.
right? But it's a rabbit hole, right? And once you go down that rabbit hole, do the work. That's what I'm going to say, bro. Do the work, right? Look, I mean, I think I did discuss with you some very specific ranges, right? And I discussed with you some concepts about how that would be applied. And I'm good for you. I'm good for you to do a tutorial and share that, right? I'm not gonna run through.
Probably because it doesn't
I'm not
work.
gonna run through the whole of that right now, right? But I mean, look, if you were going to investigate this, all you're looking for is a pivot in price action, right? So you're looking for a level on a chart, and you're saying, I want to mark a level. There's some time defined range or whatever. Let's get our drawing tool. I want to mark some time defined range, right? So I want to pick a level, and what I want to see is that price trades cleanly above that level and price trades cleanly below that level, right? As long as I'm able to see this kind of price action on a level, I would say, hey, this actual level that I've marked as a pivot, right? And if I'm going to be making life-changing long-short decisions, I would rather be making it on a level where price pivots than to be making it on a level where price whipsaws, right? Because that's just going to cost me a heck of a lot of money. So that's the criteria, right? That's the criteria that we have for determining whether a level is going to be a good level or not. Does the price pivot on this level, and can I repeatedly isolate this level, right? Well, now we have a technique for repeatedly isolating a level. We say, why don't we make it time based, right? That way I haven't applied any of my cognitive biases. I'm literally just looking at the price at a certain time, and I'm saying, is this relevant, and will the price pivot around this particular range? So let's start with 12 a.m. on a particular day, right? You just mark the hourly high and hourly low, and you go back the last 1,000 days, and every day mark 12 a.m. and watch how the price rotates around that level. Does it pivot? If you were making a long short decision, could you make it at that particular level? And you'll very quickly be able to work out whether the range at that particular time is meaningful, right? And then you do 1 a.m. and then you do 2 a.m. and then you do 3 a.m. and you just work through the entire clock. And you will find some very interesting times of day where the price tends to pivot um, at the price at that time for no other reason than it was just the price at a certain time, right? So if we're looking, for example, I'm using my monthly open range as an example here. If we were taking if we were taking this range and we're saying, hey, the price uh, came and it was literally just kind of bottom ticking this range. Okay, you could look left, right, and you might not find any reason why the price should have done it, right? When it was bottom ticking in the range there, you look left, you might not find any reason why, right? And the only conclusion you would have at that point would be that the reason price bounced from here was because it was the price at a certain time, right? It had nothing to do with cluster formations. It had nothing to do with candle structures. It had nothing to do with traditional price action based technical analysis charting, right? And I mean, I think the January Open actually is probably a fantastic example, right? Because if you look at the price bouncing there, and then you look over here, I guarantee you're not finding a damned freaking thing why the price should bounce exactly where it did. But it did, and the only reason it did it was because that was the price at a certain time, right? So the concept of time-defined ranges, I think, in markets is pretty important. What it gives you is this fixed way of charting. It gives you this almost systemic way of modeling the market, which is what you need to have before you're able to determine whether there is a pattern, a repeating pattern of price behavior that you might be able to take advantage of in order to in order to place a trade. But you can work through each day, hour by hour, in order to find those significant levels. I have some idea of what those levels might be. I mean, I've only been doing this for about 20 years now, so you might have figured out, you might have thought I'd figured a few things out, but it's always good to put in the work, right? And once you go down that rabbit hole, there's no going back, right? You'll learn a lot more about support resistance, price action, and market behavior than probably from the application of any other modeling technique available, right? I mean, look, I have quite a rich timeline on Twitter in terms of posting analysis, calling trades, and things like that. And um, it only takes a brief study of the charts I post and uh, whatever TA I show on there, because I have to remove a lot of stuff just to preserve my own sanity sometimes, right? But and as well not to give everything away. But um, uh, it's not that accuracy is not by accident, right? And repeatedly being able to make those calls is not by accident. It's process. It's framework, and what you may be getting is just a little bit of insight into um, the journey I took that got me there.
Yeah, I think something you said, which was a bit standout then, was you have to put in the work. You have to really study and study and study and experiment. And one of the things people like to do these days, and I don't want to go into this at all really because I want to get on to the next sections, but looking at AI for shortcuts to try and find these things, I just don't think it's going to ingrain in your head to be something you can rely on for years to come if you've used a machine to help you figure something out. Obviously, it's going to point you in the right direction, but I think, yeah, like the chart work and the aha moments that are the things that stick in your brain. You're not going to get that without, like you said, just putting in the work, right?
have the aha moment first and then deploy AI. Right. So I have a bunch of traders who are using AI, and they're using AI to say, for example, you've got a time defined range and you want to know, is there an instrument where this particular range works better than others, right? So we're looking at Bitcoin right now, but how would this same range perform on SPX, oil? How would it perform on some particular stock? How would it perform in currencies or in gas or in precious metals and things like this, right? So um, what we have the ranges that we like to use, and then people have kind of set up these AI scripts, and those scripts help us to um, pivot from market to market, right, and to go wherever the greatest opportunity is. So I mean, what we have is a model, and then what we say is which market does this model fit best right now, and then you shift to trading that particular market rather than getting stuck on one particular thing. So I think like AI, it has its uses, and software has its uses, and what have you. But that initial discovery, if you didn't know what you were looking for, AI couldn't give it to you, right? You actually have to just make the effort, and as well, then it's yours, right? Even once you've made the smallest effort, it's yours, and it is, like I said, it's a really interesting rabbit hole to fall down.
As a funny aside, just before we move on, one of my normie mates who is a programmer by trade is he messaged me, him and his brother had been creating stuff with AI, like these little apps that they can get it to do anything. Oh, we can get it to scrape data and then post stuff and whatever. And he came to me and was like, "Oh, what I've found, you can. What data do you use for your trading?" I was like, "That's an interesting question." And he said, "Because what we can do, what I've realized, what we can do is we can just feed a basic trading pattern into an LLM and then get it to look at all the instances with this data set to tell me the parameters to get it to win. And then we can create this bot to make us rich." And I was like, "Oh, you must be the first person to think of that."
That is week one trading, isn't it? So
Yeah, yeah.
yeah, he's found his ATM machine,
That's
the
it.
holy
Yeah.
grail.
I was like, "Oh,
Yeah.
wow. Yeah. Don't keep, well, I'll keep this hush hush because no one else would have thought of this." Um, but yeah, speaking of like hard work, I'm going to move on to chapter 3, trading with a family. Um, and for me, this is like, now I want to get into some, I mean, the technical stuff is great with trading, but what I like to do with these streams is get into the more psychological side and more of the lifestyle side. And one of the things that I have struggled with myself since I've had my son is obviously having the time and the energy to do things. And I found myself, I mean, luckily for me, I'd kind of put in all of that hard work for the years before that I had my son, and had a very good foundation, very good baseline on how to operate. I knew what I was doing. Like I wasn't still trying to figure shit out. I knew I had an edge. I knew how to make it repeatable. I knew how to make it consistent. Um, when it comes to doing new things or figuring out stuff, even like when we talked about time-based ranges, it's something I'd love to get into, but the amount of work that's required to be able to get to a decent understanding of it is something that, as a father now, I don't have that time and energy to put into it. And my son's, he'll be 2 in August. So things obviously will get better in time as he gets older and starts doing school and stuff. But you're probably, with your 25 kids, probably the most potent trader that I know. Um, I speak to a lot of dads as well. I get messages from guys who with young families and stuff with issues about how they can take their trading forward, how they can learn things, how they can figure out their edge whilst having not just the lack of the time and energy, but the focus, the discipline, and really the headspace to take on all this new information and go down these rabbit holes. Um, Obviously, you've been trading a couple of decades plus now, so I don't know if your memory is going to be that great. But what sort of advice would you have to people in situations like mine, or guys that have not yet reached a level of profitability and are struggling with, um, carving out a process because they're just not able to put in that work? Is it something that, you just have to put aside for a few years, or do you have any kind of recommendations on, maybe you just have to be selfish and go for it, and because no one else is going to do that for you. No one else is going to give you that time.
Okay, man, that opens up. I don't know, man. That's it's gonna open up a real can of worms. Yeah. So, um, I have. I'm gonna have to maybe develop some thoughts on this, right? But uh, I think it just kind of depends, doesn't it? Right? Like everyone has um, everyone has varying kind of degrees of obligations and commitments in their life outside of work, right? And um, I think the important thing is maybe just to have you, you have to set aside time where you're working, and you have to set aside time for your other commitments and your obligations, and then maintain the balance between those two, right? But if someone comes to me and says, "Look, I simply just don't have the time," right? Then to me, that's an opportunity for an upsell. I'll be like, "Hey, man, how do you fancy joining my mentoring program?" Right? Because instead of you having to figure all this out, I can just show you, and I'll handhold you through the process, right? But even then, it's like, if someone's saying, "Well, I don't have the time," what's someone going to do after that, right? Are they going to be able to put things into motion and put what they've learned into practice, right? So if someone comes and says, "I don't have the time," well, okay, you don't have the time, man. Go and do something else that you do have the time for, right? If the rest of life is so overwhelming, right, then go take care of those problems first. And once those problems have been taken care of, then you'll have time for whatever you need to do in terms of trading and things like that, right? Um, I I'm gonna maybe go off on a related kind of tangent with this, right? Which is, I mean, my personal experience was, I mean, when I started when I started my career, my first career wasn't in trading, right? It was in plastics and engineering, and straight out of university, I started a small business. And what I found is that I was working 16 to 18 hours a day, 7 days a week, right? There wasn't a heck of a lot of difference for me between a Saturday and a Sunday and a Monday. And I did that for years. And in that time, we had our first two kids, right? And um, later I sold that business, and um, I, I got a pretty good exit, right? I got a really clean exit, and then I kind of got into trading, and I was spending all my time at home, right? And consequently, we ended up having another three kids. Surprise, surprise, right? So five total, right? But um, what I would say, and I don't know if I have regrets about this or not, right? But my relationship with my older two children is much more transactional, right? They're very close with their mum, but with me, it's much more kind of transactional. Um, because in their formative years, in the years where they were kind of growing up, the first kind of maybe 5 or 6 years of their life, I was just this guy who used to visit, and it's this guy who their mum knows, right? But I wasn't kind of around for them And maybe it's a sad thing to say, but actually watch them grow up, right? So, I'd come home and hey, he's got teeth now. Look, his hair's grown long. Like some aunt that visits after a long time or something. I actually watched those two kids grow up. But the other three, because I was just always around. I was home, and I was there for to drop them to school and pick them up and take them to their clubs and gymnastics and karate and jiu-jitsu and boxing and everything else that they were doing and whatever, swimming. And man, like you just become a glorified Uber driver, right? But um, I was there for bath time and bedtime and everything else. Relatable, right? So, um, uh, the relationship with with the younger three is very different to what I have with with the older two, right? So, if I'm sitting, they come and sit next to me, and they climb on top of me, and it's really freaking annoying, right? I have to kind of push them off and push them away and remind them. It's like a big sofa, right? And there's space on the other end, and why have you kind of come and sat right next to me, right? And like when you're leaning into and falling into my gravitational field, right? You know, um, and it's nice. It's nice having that. But then I kind of mixed feelings about this because I also think that if I hadn't have done what I did in what I did in those early years, right? Then we wouldn't be in the place we are today, right? I could have just gone and got a 9 to 5 job, right? Work in a petrol station and something, start at 9 and finish at 4 or 5 or however that works, right? And then being a family guy. But um, in my 20s, there was a lot that I wanted to get done, right? And I think getting married, I think it felt like ticking a box, and having those first couple of kids, it felt I was just ticking boxes, and oh, the stuff you're supposed to get done, and look, I've done this now, right? Um, but it's like I said, if I hadn't have thrown myself into work, and if I hadn't have grown that business, and if I hadn't have made the investments I was making and everything else, and if I didn't do those 16-hour days, 18-hour days, if I wasn't working 7 days a week, I don't think I'd be in the place I am now, and I wouldn't have been able to provide for my family the way that I was able to provide for them, right? So there's a balancing act and there's a cost, right? And I think my older two, they kind of paid the price for that in a way. But in return, they were incredibly spoiled, and we've been able to afford everything they ever wanted, right? So yeah, but there was a cost, and there was a price, and you just have to decide whether you're prepared to pay it and whether you want it enough. And if you do want it enough, then it will kind of work for you. But there's a cost, and there's a price. I've experienced it. I've experienced it, and I notice the difference. I feel the difference. But it's like I said, I do think back sometimes, and I think, look, should I have done it differently? Could I have done it differently? And I think I could have, but I don't know if I'd be happy. Right? I don't know if I'd be happy doing it in any other way. So I think a lot depends on where you are, what kind of age bracket you're into, right? So when you're in your 20s, you're probably quite tightly wound, and there's a lot of things you want to get done, and you have the energy as well to be able to do it. You can't wait until you're in your 40s or 50s to start thinking about um, I, I, I don't like maybe getting into a business or some kind of line that requires that much effort, just simply because you might not have the energy that's required to be able to do it, right? So yeah, so look, man, I have a lot of kind of thoughts about it. I'm just mostly reminiscing about my own personal experiences, but regrets, I don't know, man. I don't know. Sometimes you've got to give it, and sometimes you've got to pay the price, right? Or just wait until your late 40s to have kids. Right? That seems to be the trend now, right? So, when I used to be dropping my daughter off to school, um, and I'd say, oh, like, is that your friend's dad, your friend's granddad? And she'd say, no, Papa, that's her father. And I'd be going, crikey, right? Like, dude literally waited until he had one foot in the grave to have his first kid, right?
Who was it?
So
Robert De Niro or something, wasn't it?
I don't know who it was, man,
Yeah.
but it's like, it's Elisa's dad, bro. What can I tell you? He looks like a grandpa. Um, but uh, so I mean, there is that, right? You've got to work it out, and you've got to decide what you want. And there's going to be something which is, I think, like you'd call it the need of the time, right? And if it's the need of the time, then that's where you've got to put your priorities, and that's where you've got to throw your energy, because what you're probably doing is setting yourself up for a better life for you and your family in the future, right? You can't always have it all. Some people will have an easy ride, right? But not everyone can always have it all, and then it's a matter of striking that balance in terms of how it's going to work for you, right? You waited a while anyway. We were all starting to think you were gay, bro.
You wish.
And then he goes in as a child, right? And you're like, damn,
Oh, I see. Yeah, yeah, I know.
right?
I'm just pretty. I'm not
Like
gay.
that's in the the group chat where everyone else is in it, but you're not in that one. That's what everyone was saying, man. Right? It's
Motherfucker.
right? But you waited a while, right?
I
You
did wait
waited
a
a while.
while, yeah.
So I mean, you got a lot done before you reached that phase anyway, right? So and now you've got your kind of bread and butter strategies in place. I would expect it's a lot easier had that not been in place.
Yeah, for sure. I mean, I can think back to 4 or 5 years ago when, I was swing trading for basically beginning of my trading career, up until beginning of 2022, and then I started dropping down to the 1 minute time frame, and carving out my edge there because I found it was a bit more suitable for my personality. But I've found it difficult now because obviously on the 1 minute time frame you've got a load more emotions flying, and you need to have a better state of mind, something that's a little bit more balanced. um, and I have struggled over the past 18 to 20 months since we had him because we don't get much support. Well, we don't get any support really from family. We're kind of doing it on our own. And I kind of, I one thing I've had to sort of deal with over the past couple of years on a personal point of view is that I've always been quite good at making money, and I've never really been good at keeping it. I'm very good at spending it. I used to think I was good because I was good at making the money. I thought I was good with money, but I wasn't. And it's led me to, I've talked about this with you before. Like, it's led me having to go find some contract work with my own business, and then trying to juggle trading with that, and then trying to juggle what I'm doing with social media. And something which I kind of realized maybe 2, 3 months ago was I just didn't have the energy for it at this particular point in time. It's not so much that I can sit in front of the screen and not know what's going on. It's more like I haven't got the patience because in an hour I've got to go run this errand with the family. Let me just force this trade so I can get a trade. It falls in. I was falling into bad habits like that, and I've over the past few months started moving back to more swing trading, and I'm finding a lot of pitfalls with it because it isn't compatible with how I like to be on the charts. So, for example, I'll take entry triggers a little bit earlier than I would normally, um, because I haven't got that patience for it. Whereas I've got, if it's something's flying around an M1, I know when to hit it. But one thing I've kind of had to realize is that yeah, you can park it. You just have to park it for a period of time. I really didn't want to because I put so much work and effort into what I was doing on the lower time frames. I had like a really consistent routine and really had like not just getting onto the charts, but also in taking care of my own mind, doing all the journaling, doing all that kind of like ugly work that you need to do, and have really struggled to maintain that over the past 20 months. But I've now got to a point where it's like I can't do that. I physically and mentally cannot do that style of trading at this point in time. And I've had to go through a lot of emotions. Like I've had resentment towards my situation, like resentment that I've got this, which sounds really bad, but like having like resenting the family life because it's getting in the way of the trading. And I know a lot of guys feel like that, where they want to be sitting in front of the charts. You know, you've maybe had those aha moments. You've gone down this rabbit hole, but you can't go as deep as you'd like because you've got to do other stuff. You know, like even going to bed at a certain period of like a certain time at night because I know I'm gonna have to get up at like 6:30, 7 o'clock in the morning because my son's gonna be up waking me up. I can't have that. It feels like I've got like something to get to every single morning. Um, but yeah, it's just kind of a thing for me where I've realized that I'm going to have to switch my style of trading up for a period of time until I can get back to it. And I think that's been a bit difficult to swallow, you know?
I think if you know what your A game is, right? And I think that's really important, isn't it? It's just to kind of know what your A game is. What is that thing that when you're trading, what's that thing that works for you? And I think if you recognize what that is, then you can't deviate from it, right? So if what works for you is intraday, intra-week trades, and and that's what kind of gives you your return. Um, if you're not in a position where you're able to do that, then the best thing is to do nothing, right? And whereas if your A game was swings, right, and you know, then you'd say, well, you know, if I'm not in a position to be able to swing trade, I'd rather do nothing, right? Because you know which part of your strategy generates how much of your overall returns, and as well which part of your strategy costs you what. And then you're left kind of, you have to apply the 80-20 rule and say, well, let me do more of what works and less of what doesn't, right? So I think generally kind of speaking, if you're finding yourself in these types of time constraints and you have obligations and commitments that mean that you're not able to play your A game, it's better not to play at all, right? And that's a discipline in itself, because otherwise, in the long term, you know it's going to cost you, right? You know, you might have the odd good trade here and there, but you're going to be making plenty of mistakes because you need to be in a particular frame of mind, and you need to be. I mean, there needs to be a particular environment around you that allows you to be productive in the way that you need to be. And when that environment is not there, then mistakes are a lot easier to make, right? And I mean, I think that's generic, right? It's in every aspect of life and in every kind of work, not just with trading, right? Just anywhere, anything that's anything with it's a critical function, right? So um, if I had to give advice, I'd say divorce your wife, give up the kid, right? And bro, live your best life. Be happy. You know you're happy at the charts, right? Okay, nothing puts a smile on your face, right? More than like watching Bitcoin in a 1 minute range, right? Doing 10 ticks or something, right? Bro, you know that's what you want more of, right? You want that happiness and that zest, and it gives you reason to live, right? No child is going to do that, right? So, you know, you've got decisions to make, dude,
Sound
right?
advice.
Yeah, do the right thing. Give it up right now.
Kick
Yeah,
them out of my house and reclaim it.
before they take you down with them, right? Look, they're a sinking ship, they're a sunk cost, right? See what you're suffering from is sunk cost fallacy, right? Because you've already put so much into that relationship, right? Now you've got to hang on to them, right? So
Speaking like a true master here, by the way.
just give it up, man. Give it up. Just tell them, get out of my damned house.
Yeah, fair enough. I'll go do that
Go
straight
live
after
your
this
own life,
stream.
right? You'll be happy. They'll be happy, right? And that way you can focus on charts, man.
Yeah, she'll
Because
get the support. She'll get the child support.
because yeah, like look, the biggest problem with the afterlife, right? The biggest problem with the afterlife is that they don't have Wi-Fi, right? In the afterlife, right? There's no trading view, right? There's no Binance, right? And Bybit and Loldex.
Hashtag Loldex.
There's just no Wi-Fi, bro. And so, like if you need to get your fill of trading and you need to get your fill of charts and the internet and Twitter, and you got to do it in this life, right? Because there's no Wi-Fi in the next life. You're not going to have trading there. So you might as well do more of that now, right? Just because it won't be accessible later, right? So, um, but honestly, I wouldn't know what to say, man. I think it's like uh, it's not something I've ever kind of, I've kind of had this thing where, you kind of have commitments and time constraints and things like this, but my journey into trading was a little bit different, right? So, I was already kind of doing okay before I started trading, right? And I was already comfortable financially before I got into trading, and so I didn't really have. I don't know. Uh,
Like a struggle.
it's hard to advise something that I haven't been through exactly in the same way, right? So like I had a lot of struggle in my early 20s and things like this, like with my business and things like that, and like I said, at that stage it was right. Looking back, I'd say, okay, I had to do what I had to do, right? But for every part of your life's journey, you will know best what's required, and you just got to figure out, look, what's the need of the time, and then and then kind of commit to that. The main thing is like, uh, when you're in a relationship, your other half needs to understand,
Yeah,
right?
I'm very
Need to
fortunate
understand.
in that regard, to be
Yeah,
fair.
like if she kind of understands the long-term strategic goal, and yeah, I think you've been lucky that way, right? But it's same kind of thing. My wife was very understanding, right? That and if you speak to her, like she'll tell you, like she used to feel like she was a single mom, right? Like she's the first 7 years of uh, having kids, I felt like a single mum because it's just you were just never there, right? But at the same time, like she understands too. If I hadn't have done what I did, then we wouldn't be in the position that we're in today, right? So that there's a time for everything, and I think it's better to make those sacrifices early on in your life so that you don't have to later. Otherwise, you'll reach your 40s and 50s and 60s, and all you will have are regrets about what you should have done while you had energy to be able to do various things.
Yeah, totally agree on that. And it's a lot. The thing with trading is it's a lot of work and it takes a lot longer than people think. All right, I'm gonna move this along, push this along to the next chapter. Building trading confidence. One thing which I had struggled with for a very long time was being confident that I was doing the right thing, because if you go online, everyone's always saying to do the opposite. Everyone's always saying, why'd you do this? Why'd you do that? You should do it like this. And one of the problems also was I had to write it out, and it was take the risk of being right, because one of the problems I had was choking. If I got myself into a good position, as soon as it pulled back, maybe I move my stop loss or I close, and then you watch it go without you, or sometimes didn't have the balls to put the trade on. Have you got any advice for, to build confidence with trading? Because the only thing that when I get asked that question, the only thing I say is just get more reps, just work harder, just make more reps. But have you got anything specific which you've kind of told people in your time mentoring?
Okay, so yes, I think that confidence comes from a working methodology, right? I think a lot of people, they talk about something called kind of trader psychology, right? People talk about, right? Which is, and usually what they're kind of alluding to is how their mind goes dark, right? Because what they're doing is not working, and they end up then blaming their psychology for things not working, right? It's like, I just don't have the right mindset to be able to make this work, and their head and their thoughts are in a dark place, right? And the head is constantly in a dark place. But I think a lot of people, when they talk about the psychological element and having confidence and things like this, alongside having a good working method, something that's battle tested, something that's battle hardened. People often kind of put it as a chicken and egg debate, right? So it's like, what comes first? Your methodology, your system, or your psychology? And they'll say, well, it's a chicken and egg question. I don't think it's a chicken and egg question. I think it's a horse and cart question. I think that methodology will always come first, system will always come first. If you have a good working system and it does what it says on the tin, then you will have every confidence to take the trade and the next one and the next one and the one after that, because it's a working methodology, right? Whereas if your system doesn't work, you are going to end up in a dark place. And it's not because there's something wrong with your psychology. It's because there's something fundamentally wrong with your system. Whether you're able to acknowledge it directly or not, subconsciously the thing is broken and it's not going to work over the long term. And so when it comes to method or system versus psychology, I think it's more horse and cart, right? The horse always leads the cart, and the horse is the system, right? And so, when people kind of talk about struggling with mindset and things like this, I think you have to mindset is a symptom, and you have to go to the cause, and you say, well, go back to your system and fix what's broken, right? And when you're having good trades, and when you're having a run of good trades, and when you're having a loss, and then over time you're able to recover that and regain trajectory in your equity curve, your psychology will take care of itself, right? Because it knows what the methodology is capable of, right? So, just your game has to be good enough. I'm going to start going into like 100-year-old analogies or something or whatever, right? But do you remember Tim Henman?
I do.
Right? The British number one.
Go on, Tim.
Right? Henman Hill. He was the British number one, but the world number freaking 7,000 or something, right? But he was the British number one, right? Okay. Give him the best sports psychologist in the world. Give him the top 10 sports psychologists in the world, right? And put him in a match against Nadal or Federer or whoever. The guy was never going to win, right? Just because his game was not good enough, right? But take the other chap, right? Andy Murray, the Scottish geezer, right? British number one, right? But like, at one point, I think he was like the world number 3 or number 2 or something, right? It's like put him up against Nadal and Federer and whatever, right? And if he's ever in good health, right, and he's not got some injury or whatever, right? Like, you say he actually has a chance, right? Why? Because skill matters, right? Methodology matters. System matters. Your game just has to be good enough, right? And so I think sometimes when people struggle with confidence and mindset and things like this, I think it's subconscious. Your system's not good enough. It's not working, right? And your subconscious will kind of uh, you have alarms going off, right? Because what you're risking in every trade is hard earned, right? It's not something that was given to you. It's not something that fell in your lap and just kind of miraculously appeared out of thin air. It's worked for, right? And you want to put it at risk on a system that doesn't pay, on an approach that doesn't work, right? And so quite often, if people are struggling with confidence, they need to deal with the root cause, right? What you need is a battle-hardened strategy, a battle-hardened system, something proven to work, right? And dude, like you spent a fair bit of time on social media, right? And you can look at the absolute state of FinTwit, never mind just CT, right? But the absolute state of FinTwit, right, is what? People make generic calls. Why? Why won't they just say, hey, I'm buying this? Right? Why does it have to be in a language which is kind of, you can make it mean one thing and you can make it mean something else.
Yeah, I'm trying to think of the
Right?
word, but I can't remember it.
Because they know, right? They know that what they're espousing is bullshit, right? It's just kind of, it doesn't work, right? And they don't want to get caught out having made a bad trade or something, like, or having made a bad call or whatever, right? Like if you look at the real ones on socials, right? They call their trades and they have a bad one and they call another one, and it just kind of shows you the degree of confidence that they have in their approach, right? That calling a bad one doesn't knock the wind out of them. It doesn't knock 6 out of them, because whereas someone who doesn't know what they're doing, right? They're kind of used to getting things wrong, right? Whereas when someone knows what they're doing, they'll have a good trade and they'll have a bad one and then they'll have another good one, right? And it's usually asymmetric in some form, and so whatever they're generating on the winning trades is kind of far outstripping what they had risked in any single trade, right? And you can see who does that, and then you can see any number of experts who don't, right? And they'll just do generic posts about TA, generic posts about how their day has been, generic posts about mistakes that people make that they should, without ever having called a single freaking trade, right? To prove that any of the insights that they're giving have any kind of value at all, right? Because that's what would prove value, right? Is, hey, check out this guy's trades, right? The dude is absolutely like killing it, and here's his insights into what works and what doesn't work and what have you. So, I mean, confidence just comes from a working methodology, right? And in my early years, it's like that. There were times when I found myself in a hole, right? And you have to dig yourself out, but it was always, what is not working about my system right now? What do I need to be doing differently, right? And you start figuring those things out, and then and things start working, and then very quickly you end up with probably the other end of the problem, right? Which is overconfidence, right? So it's like, full margin, right? Pedal to the floor, right? Pedal to the metal, or whatever you call it, and it's like, lever to the right, and and it's the far extreme of a completely different type of problem. Uh, uh, but get yourself a battle tested strategy, something that works, and you experience less and less of the kind of confidence issues. Like when I'm teaching people and when I'm teaching my students, like an interesting thing which I've observed is that um, you kind of get sometimes, hey, will this ever stop working? Right? So like when people finally discover a simple way of doing something, right? They end up with a kind of completely different fear, right? Which is, I hope, will this ever stop? Right? Or can I just keep doing this? And uh, uh, and so yeah, it's quite interesting to kind of see that change in dynamic in people as well sometimes.
I guess it's kind of like a bit not imposter syndrome, but kind of hard to believe that things can be good for you, if that makes sense.
Yeah, things start working out, and then the fear is that it might stop working. Right? It just becomes the opposite. Whereas I think most people, what they kind of know is deep down, whether they want to acknowledge it or not, deep down they know that they can never risk more than $10 a trade, because if they did, they're going to lose their shirt, right? And it takes quite a high degree of confidence to be putting $1,000 a trade, $5,000 a trade, and even more sometimes, right? It takes a certain degree of confidence to be able to do that, right? And that confidence is going to be in your system. It's not. It's not a confidence in you, right? It's a confidence in the system, that the system works, that the system pays out, that the approach is a working approach, right? That's what allows you to do it, and it allows you to keep on doing it. I'll post a clip later. I'll send it to you on WhatsApp. Maybe you might want to post it yourself, right? But it's a fantastic clip. There's an interview with Druckenmiller where he's talking about throwing up after taking bad trades and stuff, right? So like literally puking and stuff like this. But it's like it comes with a certain level of risk, right? That like the guy was managing like tens of billions, right? And putting on these massive trades and then literally throwing up the moment he'd taken a trade and stuff like this. But you find it quite interesting, right? I mean,
Yeah,
it's
send
the
it
good
over.
and the great, but he gives a lesson at the end of that, right? Which is to kind of say, look, I've already made all the mistakes I was ever going to make. I was making those mistakes 20 years ago. And a point comes where you just kind of have to accept and believe in your edge, right? That look, I'm still here 20 years later. That's kind of what he was saying, right? Like, I'm still here 20 years later, 40 years later, right? And I just kind of have to accept that at this stage, maybe I know what I'm doing, right? Otherwise, I wouldn't be here, right? And I think that's probably a lot closer to imposter syndrome, right? Which is just kind of recognizing, right? So um, yeah, it's interesting the kind of journeys that people take, right?
Yeah, for sure. That kind of actually moves into the last chapter, which we'll whiz through because we're getting on to nearly 2 hours now, believe it or not. I knew this would happen. Um, Mentoring lessons. Obviously, you have a mentoring program, and you can find the affiliate link in the description below for 50% off, and I get the kickback for that. But just what I wanted to ask quickly on that. Um, Having done my own sort of mentoring in the past, obviously I had the BTG group with Tyler and Maine, and we had scores of different traders coming in, and we were able to see common problems that traders would have. For example, I would say, here's a setup, here's your limit order entry, here's your stop loss, and here's your take profit. And if you gave that to 100 people, 95 of those people would trade it completely their own way. Um, from your years of mentoring, has there just maybe like top two or three sort of common problems that seems to be a sort of rite of passage maybe that traders have to go through in order to be successful. But have you noticed maybe two or three common struggles that people have, and have you got like a solution for those that you can put into a 5-minute section right now?
This is going to need a few hours, right? But
Yeah, right. We have to do
um,
this again.
we might need to come back to this. We might need to come back to this another time.
Not in 6 years, but
Yeah,
yeah.
yeah. I mean, there's I don't know. I think there's so many different issues that people kind of face, right? But I mean, I there's some advice I always kind of give my traders, right? Which is to say, hey, you're learning a system, but you need to give yourself the space to learn the system before you start aggressively trading the system, right? And I'm going to need a minute to maybe explain what that means, right? So, look, we've got a system, right? We back test it the last 3 years, right? And every year, month on month, it's a winning system, right? Just kind of by way of example, right? So having done the back test, you're ready, right? You're like, look, man, I don't know why I'm trading at $50 risk, right? I want to be risking $5,000 a trade. Okay. If you're trading a system, um, let's say you take a trade and um, you've got 5K risk in that trade, right? And the price is moving up and down. Are you watching what price is doing on the chart? Are you watching your P&L? Right? Most likely you're following the P&L, and your ECG is also correlated, right, with the P&L. And so price drops a little bit and it goes negative, and you're kind of going right, and then it comes up and it's gone in the money a little bit, and you kind of feel a bit calmer, and it goes a little bit higher, and then it comes lower and it's back negative, and then it goes a little bit in the money and you close the trade. You, how much of that was how much of that trade management was watching the PA and following the rules of the system, and how much of that was just pure reactionary to the amount of money that was at stake in that single trade, right? And it would be almost entirely all of it, right? That entire trade management was the result of what you had risked. Okay, so whereas let's say you took that same trade, but you're risking $100, right, or 50 or 10, right? It needs to be it needs to be so much that it matters, right? But not too little that you'd forget, kind of thing, right? So let's say you're risking $100 a trade, and the price goes up and down and up, and it makes absolutely zero difference to you whether the trade is going to pay out or whether it's going to get stopped at, right? It's like you're not going to go and weep over $100 the way you would over 5,000. And so you're learning this system, but actually now you're observing the chart and you're watching how does the price behave. And you've got this level marked on a chart and it's fixed, and you're observing that there's a pattern of behavior, how the price behaves after you've executed the trade, how the price goes into drawdown, how it looks when it's going to kind of confirm that it's going to get stopped out, or if it's going in the money, how the price actually runs. You actually get to observe that, and you actually get to learn that, right? And this is what I mean. When you're learning a system, you need to give yourself the space to learn it, right? And so the thing that normally stops people from learning is just from being over leveraged and undercapitalized, right? They're just risking too much too early at a point when they know that they don't know what they're doing, right? And So if they do happen to make money, it would have just been the result of sheer luck. And lucky people then go and get unlucky and then lose everything, right? And people can be lucky for a really long time before they realize, hey, this is just luck, right? Yeah, like one of the funniest kind of it's not a funny story. It's not funny for the guy, right? But like back back in the day, I mentored someone, right, who had made 100 million Australian dollars plus, right, from Bitcoin. And it was literally he was a poker player, and he had a lot of Bitcoin he used to use on these poker exchanges. And he's a poker star. He's like a professional poker player, televised $1 million tourneys and stuff like that, right? And um, he woke up one morning, it was like Christmas 2017 or something, and Bitcoin had gone to 20K. And he thought, yo, right, I've got a shit ton of Bitcoin. And he had it lying around all these kind of illegal poker sites, right? Because it was the only way you could actually fund those betting sites. And he cashed out, and he was sitting on 100 million Australian dollars. And then he thought, I don't know why I've been playing poker for. I could just buy and sell Bitcoin. Right? And I think you know how the rest of the story goes, right? But it wasn't long before he halved his fortune, right? And so, it's like when you make money getting lucky, at some point you're going to get unlucky. And whatever came to you by luck, you will lose it being unlucky, right? It's like, as far as you climb a hill, that's the same distance down, right? So, um, so you want to practice a system, and the thing you have to do is to take care, right, that you're not over leveraged or undercapitalized, that you're doing it with a little bit of money, just enough so that it bites, just enough so that it hurts when you lose, but not so much that if you lose 10 times in a row, 20 times in a row, 50 times in a row, that you're going to be weeping about it, right? And for someone that might be $100 a trade, for someone that might be 50 a trade, for someone that might be $10 a trade, for someone it might be $1 a trade, right? Just got to loosely match that criteria. And so when you're trading a system and you're doing it at that level, you're giving yourself time to learn the actual system, to learn how does the market respond, right, to this type of activity. And once you've learned that, then you're in a place to go and start taking risk, because you've done that 1,000 times, and you place a trade, and then it doesn't matter that you placed a trade for $10 or whether you placed it for 1,000 or 10,000, because you actually know how you're going to expect the market to behave. And then you will manage that trade according to your expectations of market behavior, rather than managing the trade by looking at the P&L, right? So I think this is like a common error in people's trading journeys, which is just they don't give themselves the space to allow themselves the time to actually learn whatever system it is that they're looking at, right? And if they did that, they'd be in a lot better place. And it's that kind of thing that the result you're looking for is a year out. It's 6 months out. It's 9 months out, where you start. You plant the seeds in April, and the crops grow in September, right? And that's when kind of harvest happens. And you have to allow yourself the time to be able to do that. The market will be here in 3 months, 6 months, 9 months. The market will be here in a year. It will be here in 3, 5, 10, right? There will always be a market of some form. So, you take the time to allow yourself to learn, and then once you know what you're doing, that's when you're better placed to start actually risking what would be considered a decent amount of money. And I'm going to add, I know I'm kind of hogging the mic here, but there's one additional note that I want to add to this, having mentioned decent amount of money, because that's the place that you need to reach. right? You need to be able to reach a place where you can place trades risking a decent amount of money. That's real confidence, right? And you know, if you wouldn't throw a lot of money at whatever system that you have, it says everything about your system, right? But you need to reach that place where you're able to do it, because that also has um, a there's a net effect that comes after that, right? Which is that, look, you know, people often talk about patience and discipline and lacking patience and things like that. And um, honestly, it's not that people lack patience. It's just that um, they're not risking enough, right? Because if you were risking enough, you'd be making enough. And when you're making so much off of one trade, um, it really doesn't matter if you hit another trade for a month or 2 months or 3 months even, right? You will end up finding that you have all the patience in the world. And the only reason that you're rushing into the next trade is because you're risking $100 a trade, right? And what you're making off of that, you need to be taking 10 or 20 trades in order to generate an amount that would be considered a return, right? So, first off, allow yourself the time to learn. Once you've learnt, then you will have the confidence to lever up. And once you've levered up, what you will find is that you're never rushing into the next trade, because you know what you make in any given trade is sufficient for you not to need the next trade for a very long while, right? I mean, I think a lot of people have noticed I've been a lot less active on X this year than in previous years, and I've actually been trading a heck of a lot less. Right? It's like I've taken less than 10 trades this entire year, and it's kind of paying out. It's not actually from monetary terms. It's not the same pay stage I was at this time last year, but you know, it's like it's paid out significantly enough where it's really not mattering. And it is because there's enough risk behind each individual trade that I don't need the next one, right? Whereas, you know, if I was playing the game at $100 a trade or $50 a trade or whatever, then um, it, I would need to be at screen 24 hours a day to make it worthwhile, right? To make the payoff kind of worthwhile. So payoff comes with taking risk, but before you take that risk, what you need is a battle hardened system. You need a system that you can have confidence in to be able to play the game at that level.
Cool. Perfect. I'm going to end it there because that was very well said. As a just like a little tiny addition of my own experience with that, I would say that once you have enough repetitions with something, it becomes kind of like a muscle memory, doesn't it? So if you were doing something on a simulator, or if some skin in the game, it's almost being able to navigate. You know, if you take like a long drive, like you drive 200 miles, but you do it the first time you're using a sat nav, and then once you've done it like 100 times, you know the way. It feels a little bit like that. You've kind of got this confidence. You know what turn is going to come up after you've made this turn, and that allows you to size up, because it doesn't become, oh fuck, I might lose this, I don't know what's going to happen next. It's kind of, I have a very good idea of what's going to happen next, and I'm just going to wait for that to play out. That's been my experience with it anyway. So I'm going to wrap this up here because we have been 2 and a bit hours. I did put everything else off for the rest of the evening, so I thought we would waffle on a little bit. But thank you, Will. Thank you for coming on. Thank you for chatting. Enjoy it as always.
Good show.
And we'll have to do it again another time, and because I've probably got about 15 other subjects we could talk about.
Yeah, definitely.
All right, guys, you take care. Hope you've all enjoyed it, and see you for the next one. All right, bye-bye.